Aloha and welcome back to the week that was. We'll be starting in just a moment. If you're catching me here on X, please, if you want to see the actual podcast live, we are also on YouTube. So thank you very much for tuning in. We're going to get started in just one moment. Aloha and welcome back to the week that was. I am your host, Colin Edsman, live here on YouTube, as well as live audio on Spaces on X for the very first time. So thank you for tuning in wherever you are, whenever you are. Thank you for joining me in the chat, Mrs. Edsman. I really appreciate it. We got my wife checking in from the other side of the house, making sure that I look good for you guys and I sound good for you guys here on X. Now, I hope everybody had a great week. Well, as best as you could. This week was very, very hairy. Well, today is the 24th of July. And if you made it through this week, in the market with your blood pressure intact, congrats. You're tougher than most. This is not necessarily a boring week by any stretch of the imagination. We had big tech earnings blow up in real time. We had Tesla have its worst earnings reaction in over a year. We had oil ripping around because of what's happening in the Strait of Hormuz. And now if you've been watching this podcast for even a week, you know I hate talking about that strait. And I've been talking about that strait for months now. We need to get the heck out of there. And the Fed's about to walk into a room next week and decide what happens with all of it. This is exactly the kind of week this show exists for, because the headlines move fast, but understanding why they move is what actually makes you money, or at least keeps you from losing your shirt. A little bit of housekeeping before we move on. Everything on this show, the market talk, the Kairos portfolio update, which I'll get into later on, all of it. It's for information and entertainment purposes only. This is not a financial advice section, and I'm not your financial advisor. Kairos is an experimental, AI-driven trading desk running real but limited capital. Past performance, including anything you hear tonight, is not a guarantee of future results, and trading involves real risk of loss. Do your own research. Talk to a licensed professional before making any decisions with your own money, and never invest more than you can afford to lose. Now let's check on everybody, see how everybody's doing. It seems like audio's working on both sides. Let's get into it. Now, these are the three stories that mattered for the week. Let's start with that. Story number one. The Magnificent Seven just got a huge reality check. Thursday was ugly. The Mag 7 collectively shed close to $800 billion in market value in a single session. The trigger was AI spending anxiety colliding with two big earning prints, Google and Tesla. Alphabet actually put up a strong quarter. Q2 revenue of $119.8 billion, up 24% year over year. Google Cloud revenue up 82% to $24.8 billion. That's a great quarter on paper, but the stock sank anyway because the Magnificent Seven raised their because management raised their 2026 capex guidance to as much as $205 billion. Wall Street heard record revenue and then heard we're not going to spend more than GDP of some countries building data centers and decided to sell first and ask questions later. Now, this matters because the tension is defining the entire AI trade right now, and the spending and investment that pays off, or is it a bottomless pit? Every hyperscaler earnings call from here forward is going to get graded on that question, not just on revenue. When the company beats and drops anyway, that's not a random dip. That's the market repricing the cost of AI buildout, not the revenue. Watch CapEx guidance and as closely as you watch the headline beat. That's the takeaway for that. Now, for our next story, Tesla had its worst earnings day in over a year. Tesla dropped about 14.5% on Thursday, its single sharpest sell-off or decline in more than a year, wiping out over 140 billion in market cap and roughly 18 billion off Elon Musk's net worth. Today he tweeted on X, previously a trillionaire. That was hilarious. But the revenue actually beat estimates, but profits missed. Margins compressed, and free cash flow flipped negative as the company burned through more than 1 billion investing in robotaxi, Optimus, and in-house chip manufacturing. This is why that matters though. Musk doubled down on the vision. Robotaxis or cybercabs, humanoid robots, the whole story, but gave the street almost nothing concrete on timelines. Investors have heard this movie before, and this time they didn't wait around for the sequel. Here's the takeaway. Tesla is no longer trading like a car company or even purely like a tech company. It's trading on faith in robotics and an AI story that has to keep delivering proof, not just promises. When the proof doesn't show up, the stock pays for it violently. That's not a new story for Tesla, though. I mean, if you're a Tesla holder at all, you know this is kind of a volatile stock, especially during the, well, Doge era. The administration as a whole kind of puts a little bit of an overall macro on the stock as a whole. But let's get into the fun story here. Intel, my big baby Intel. Intel's big bounce back quarter. Now, what happened was not everything in tech was a disaster this week. Intel reported Q2 revenue of 16.1 billion, up 25% year over year, its strongest quarterly growth in over 15 years. Crushing estimates, adjusted EPS came in at 42 cents versus the street looking for 21 cents. Data center and AI revenue also alone jumped 59% to 6.3 billion. Wow, imagine if it was 63 billion. That would be crazy. But here's why that matters. Intel's been in the please just turn around stock for years. This quarter was the first real evidence the turnaround thesis actually has legs, especially on the AI data center side, which is exactly where everyone assumed Intel had already lost the race. Yo! Garrick's in the house. Thanks for joining the chat, my friend. Please, if you have any questions, drop them in the chat. If you want to talk about anything, drop it in the chat as well. But here's my takeaway on Intel for a second. Don't sleep on the laggards. Like, this company was in the $18, $19 range a year ago today, right? So you never know what you pick up and believe in that's going to kind of turn around. The AI trade isn't just NVIDIA, and the hyperscalers, chip manufacturing capacity is the bottleneck behind all of it. The Intel just showed up as a real player in the conversation again. And I know personally I love Intel, so I'm going to be a bit biased. And also, they have such a long history. They've gone through almost everything this generation has gone through, and also come out on top. They're kind of like a barometer for millennials, if you want to go with that. Now, we usually only cover 3 stories, but there's a bit of a bonus story here. So, Robinhood CEO, our boy Vlad, his X account got hacked this week to pump a flippin' meme coin. I saw it the other day, but let's get into some of the details behind it. So, Thursday, Vlad Tenev's, well, if you don't know who Vlad Tenev is, he's the CEO and, well, captain of Robinhood, but his X account got hacked. The attackers posted about a brand new meme coin. You know what? I'm not even going to give you the name because they can go eat rocks. Calling it the official mascot of Robinhood Chain Robinhood Chain Network, and claiming it would get added to the Robinhood app. On-chain records show the wallet behind it had already funded itself and launched a token about 45 minutes before the hack post went live. So from a detective standpoint, this had a lot of premeditation to it. So that's an interesting thought process. Like they kind of had to plan within a small amount of time. Excuse me, I'm just adjusting something here. How to get their meme pumped as well as his account hacked. That's a team effort here. The post racked up about 175,000 views in 20 minutes before it got taken down, and blockchain analysts estimate the hackers walked away with somewhere around 650 Ethereum. Call it low 7 figures, which is not small. But this is why this matters, and this is super important. That's why I wanted to cover this bonus story here. This is the ugly side of the meme coin frenzy. A hacked, verified high follower account is basically a printing press for scammers, and it worked under an hour. Tenev's account has since been restored, and Robinhood Comms is going through and trying to investigate, as well as trying to work with X to figure out who did this. Now, of course, we saw the meme earlier this week about, you know what, let's just find it because it's hilarious. But there was a bit of a meme this week that would fit perfectly for this. Let's see if I can find it without it taking a long time. Now, I'll come back to it when I can see it. Now, for the takeaway, if you see a CEO, any CEO, suddenly hyping a brand new token on social media, that's a quote, verify before you ape in moment, not a buy the dip moment. Come on, don't be an idiot. Like, I saw it and I was like, okay, let's verify this, and then immediately it was already taken down. So just assume it got compromised first before you go in and try to buy whatever POS coin this was. Ugh. But while I'm looking for that thing, did you guys get a chance to see the Odyssey? Now, like I know. I might catch the swords for this one because yeah, I was a bit about it before I went to it too, because I saw all of the um all the nonsense that came around about it, right? People talking about it, right? Doesn't matter. Just for me, just let the movie take you. Go watch it. Enjoy the Odyssey. It doesn't look like I'm going to find this thing I'm looking for, so it really doesn't matter anyway. But please, go and watch the Odyssey. It was a great movie. And if you see a CEO pumping a coin, block that. No, that never happens. All right, so let's get into the index side of the week, which was also rough overall. The S&P 500 is down about 0.6% on the week, though it clawed its way back Friday to close at about 7411, up about 3.68 points. NASDAQ was the real loser on the week, obviously on tech, down about 2.1%, and it fell another 0.6% on Friday alone. And that's the AI spending anxiety showing up directly in the tech-heavy index, obviously, right? That makes a whole lot of sense. Now, Dow down almost 0.5% on the week, but actually rallied Friday up 235 points to 51,947. Money rotating out of mega cap tech and into more defensive slash value names. Now, here's the sector story, though. Communication services and consumer discretionary were the week's biggest laggards, down roughly about 6% on both. It dragged down directly by Alphabet and Tesla. Uh, when your two biggest sector constituents both get hammered on earnings in the same week, the whole sector kind of eats it, right? It's like your guard was down and you took a right hook straight to the jaw. You're not going to go down, but it's going to hurt for a second. But here are the winners on the week. Obviously, my baby Intel, the turnaround quarter, and energy got a bid as oil spiked on the news in the Middle East. We'll dig into that next. Now, here are the losers. Tesla was down about 14.5% Thursday alone. Alphabet sank despite beating. And the broader Mag 7 complex that dragged down, got dragged down with them, right? The whole ship went down this week, but it didn't sink completely. Thesis is still intact. AI is still going to be here, blah, blah, blah. You know I rattle on about this all the time. It's getting boring. AI is going to be here. Just figure out a way to invest in it. That's it. That's all you got to do, even if it's simple as energy. But let's get into the oil angle. Brent crude has been on a wild ride. Let's just go with that without getting into too many details here. It spiked towards $102 a barrel on fresh fighting near the Strait of Hormuz. I hate talking about that place, but honestly, this whole podcast, the life of it, the whole last 6 months, majority of it, we've been talking about this strait. I should get a sign back here somewhere. It'll just say Strait of Hormuz Advertising Department. I should get a friggin' royalty from it, but whatever. Okay, that's the choke point here. That's what handles roughly about 20% of the world's oil traffic. When that area gets iffy and dicey, the whole energy sector gets iffy and dicey. We know that, right? But then it settled back down to almost 4% to $96.78. US forces carried out strikes against Iran this month and reinstated a naval blockade of Iranian ports. This is not a watch it and forget it situation. Hormuz disruptions are one of the few things that can put a real floor under energy prices no matter what the Fed does. All right, so thank you for sticking with me, whoever's here with me on X, which is, okay, in and out, people coming in. All right, no problem. I didn't expect anybody there, but I'm thankful for everybody listening in. If you got any questions, please don't hesitate to ask. I will happily get into them when they come in. All right, so let's get into our deeper angle. Here's what I think is actually going on underneath all of this. And it's bigger than any single earnings report. We are in the middle of a CapEx war in AI infrastructure, and this week in the market started asking a question that's mostly avoided for 2 years now. And here's that question. At what point does spending become value destruction instead of value creation? Alphabet beat on every headline number and still got sold because of the CapEx raise. That's kind of new. 6 months ago, the same guidance would have been cheered as leaning into the future. Now it's read as a margin threat. Tesla's story is the same coin, but on the other side. Burning cash on Cybercab and Optimus with no hard delivery dates, and the market said, "Show me, don't tell me." It's people want to see people making profits, right? The market wants to see where this is going. We're done with the hope and throw money at it phase, right? We've been talking about this for a few weeks now. we got to show me where the money is going to go. You got to show me what the money's going to make. And and I'm going to keep coming back to that random shoe company that label slapped AI and all of a sudden pumped. Like, that was kind of a red flag. You can't just have a company slap AI on and then pump. AI takes a lot of time to program. It takes a lot of time for it to run correctly. And you got to get the data. So you sort of have to run it, well, wrong for a few weeks to see what rattles and falls off this machine. But meanwhile, on the Intel side, the company everyone had left for dead in AI put up the best growth quarter it's ever had in 15 years. Most likely, and because of the infrastructure that's already laid in, that's not going to go anywhere. Foundry development is very difficult and takes years to do, and Intel's already got them going. And it's also on the back of the AI data center, as well as demand for those AI. That tells you the overall demand for the AI infrastructure is real and growing. What the market is now pricing is who gets to capture the return on that demand. And it's punishing everyone whose spending outpaces their, well, proof, right? People want receipts, right? In this world, everybody's having a hard time, right? A lot of us everyday investors are here in the market too. So our money matters and we watch a lot of news. So we want receipts. We want to know that our investments are going to pay off too. Because we're going to be in the markets a lot longer than, well, Uncle Warren Buffett and other older people, right? We're going to be here longer. So we want them to show me the money, right? We want people to show me the money because that's what really matters here. AI is pretty straightforward. You can throw it and have it design almost any company. I had it randomly design a sign company that's completely automated. Now I'm getting a lot of backfire, but hey, it's automated. I don't care. It costed me zero time and literally one session of prompts. Like, I used a leftover change that I have at the end of the week. You go through Claude, do its thing, and all of a sudden it says 75% of weekly usage is coming up, and you're like, oh, well, at least today's Friday. Let's just run something random, right? Because I'm done with the week. I've got everything done. Might as well use up the rest of the weekly coins. So AI is not that difficult to use, but you want it to be profitable. And big companies need to show us that they can be profitable here. Now, let's talk about the geopolitics side. Hormuz oil spiking to $100 or more, settling back to $97. And you've got a market that's nervous too, right? With two fronts at once. Is the AI spend disciplined? Is the energy supply chain stable? That's a lot of uncertainty walking into a Fed decision. This is a show me the money kind of market, like I said. Plain and simple. Growth alone doesn't cut it anymore. We saw Google beat everything and still got meh off of it. That's kind of a telling sign here, right? So keep your eyes open, gang. Keep your head on a swivel. We don't know where the money is going quite yet, but we're going to find out because that's what we do here. The market wants growth, right? Plus discipline. We all want that out of ourselves too, right? Keep that lens on, right? On everything you've been evaluating going into next week. Now, let's get into my AI portfolio Kairos here for a second. But before we do that, yes, okay, cool. All right. I'm checking here the chat. All right, Garrick, yes, I'm going to get into the AI portfolio right now. If you have any specific questions or anything, go ahead. Because this is going to be a very interesting, oh man, AI and I, if I could punch Claude in the face this week, this would have been the week AI would have caught it to the jaw. Ugh, okay. I'll be back in just 1 second, though. Give me one moment. My goodness, man. Oh, Claude, I'm gonna punch you. All right, welcome back. I just had to get a little bit of sip of water. We are here about a half hour into our show, and now we're going to be talking about the Kairos portfolio update. Okay, so overall this week, what it came out okay. Let's talk about it here for a second. We closed the week down about 5.3%. Right, it's a momentum portfolio, so I'm not too concerned about it. So it's not been like a great week on the portfolio side, and I'm not going to sugarcoat that. And you're gonna hear more about it here. Here, I'll tell you exactly why. So the trades that closed this week, the first trade was KIE, the insurance ETF. That has been carried for like 13 days. I had to cut that on my own because it wasn't moving at the momentum it should have. Now, it sold for a net profit of 4.95%. So it still sold for a profit, but not the 8% momentum profit I was looking for. So it was a clean exit, no drama there between me and Claude. The other close is the one that we're going to go through real carefully because this is the one where I got a little bit heated with the computer a bit, because this is the kind of a red flag on the entire like system as a whole that I want to just make sure we suss out before we keep going. So the desk found my open position, open door, which I moved over from a different portfolio because I was running the wheel on it um, myself and with other shares. So I moved some of it over and just had it run the wheel with those shares. Now I bought those shares a while back, right? So it was sitting in the brokerage, right? It closed the covered call that it had for the 50% profit that it's designed to, but it didn't have any other matching trades to go back into, so it kind of just sat there. So the account with no matching trade record for some reason, no entry date, right? Because I transferred it over. It didn't have a reasoning logged and attached to that position. And critically, no stop loss was ever placed, which is fine because it's, well, a wheel, right? It doesn't have a stop loss set up like that, right? That's not how the wheel strategy functions. Now, if you want to know more about the wheel strategy, there's literally 10,000 million books on it and podcasts. You can go find it. But I'm just having my agents run that wheel. So because it didn't have that stop loss placed, like a mandatory stop loss, like I talk about, all the positions have to be bought in whole shares because you can't put a stop loss on anything that has partial shares by an agent for some reason. I don't know why. Maybe they'll fix that later. Um, but also, it has a mandatory stop loss set and mandatory lines where if it hits this, it sells off, no questions. But because those open door shares came in already lower than the buy line, on paper, but not actually the basis. The basis was lower than it was due to the wheel. That reconciliation gap it had in the system's paper trail, and what actually happened was it straight up just sold it. Like it sold those shares without permission, basically. And I'm like, why would you do that? Now that loss has already been covered, but the paper is like, it's like, that just like hurt my feelings just a little bit. I was like, dude, all you were supposed to do was just leave that alone. That wasn't even that agent's job. That agent was this lane. Why did you go over there and start effing with stuff that wasn't even your So that's why I got, a little bit like I want to punch your machine today. And then on top of that, if you follow me on X at all here, I'll try to pull up those posts because that was another reason I wanted to get really into it with Claude this week, because it just wouldn't shut off. So to sort of run it in an automated way, you have to, if you're going to use just Claude, or you're going to have to use Cowork and schedule these tasks and then have them run on on a schedule, right? But for some reason, here it is. This week, it refused to listen to me. So if you can see here on the screen, it just refused. Like every time I told it to stop, or stop immediately, it would just keep pinging me with this period. And it went on for like hours. Like I had to just turn off Claude, which I'm like, I need you to do other stuff. So I couldn't just cut off dispatch, but eventually I found out how to fix it. Here, I'll pull that up too. It's just like, ugh, I cannot. It's like, what is happening with you today? Like, look how much it kept going. Like, it just kept going, just throwing me dots. Like, I don't have a picture of it, but it also started throwing me shakas. I was like, don't do that. Like, just stop pinging me, computer. Just stop pinging me. You're supposed to make my life easier. But I eventually found out how to stop it. So if you end up using Cowork and Claude in your computer, but also you're going to end up using Dispatch, which is how you talk to your computer with your phone, right? So you use Dispatch to talk to your computer to have it run new tasks, design things. Because the Claude app in your phone does not, well, make anything. It's just mostly a chat. So you need the computer, but you don't always end up here at the screen. So sometimes your idea comes in, you can tell Dispatch and have Dispatch, well, set up a scheduled task in the computer, and you never have to come to the computer. Other than like this, where it literally just felt like kind of blowing up on me for a second. But you live and you learn, and this is all new. I talk about AI with a lot of people, and a lot of people are kind of dicey about it, and I don't blame them because it's relatively new, and there's not really a 4-year degree on AI, right? Because it hasn't necessarily been good that long. So me and you guys and all of the other people playing with AI are on roughly the same level with different compute powers, is kind of how I'm getting into it. All right. Hey, brother. Hey, thank you for joining me. I really appreciate it. I'll talk to you soon. Hey, I'll see you at Hood Summit, bro. Love you, man. Thank you for joining me. All right, let's get back into the Kairos trading desk because I still want to punch it in the face. Let me just hit back Eric real fast. All right, so the system ended up catching up and figuring out all its stuff, right? It does, but you have these trials and tribulations with AI sometimes. But because of the fact it didn't see it come in and it didn't see where it came from, it followed all of its instructions. It's just its instructions should have stayed in its lane, not this agent's lane, right? We have different agents for different stuff. So we have one doing one thing, one doing another thing, and then we have one doing the wheel. Just stay over here. So that's all I think over the weekend it'll figure it out. I'm just gonna run it and let it pick and choose. I'm gonna use the new Opus 5 because that just came out. From what I can tell, Opus 5 is roughly the same compute power as Fable 5 for some reason, with less cost. So duh, run it there, right? Obviously. But because of all that, it took that 38% loss on that on the open shares that because of how far back I bought them. But I want to be straight with y'all. The desk's own honesty here, right? That's what we're here for, right? That was a real mistake. That was a huge mistake that I didn't want it to do. It wasn't a bad trade. It was a process failure overall. A position existed without proper stop loss coverage and without being logged, and it cost real money, right? So that's not always fun at all. So, and that was before I caught it, right? Because I design it so it goes before I wake up because, as you know, I'm here in Hawaii, right? Hawaiian guy. So I have hours that are way different than the rest of the country. So the dark hours, I would like Kairos to do its job. And then the light hours, I can kind of help and do my own positions, right? So it kind of helps me grab the entire day, just like everybody else has, just like people in New York City has. But I don't necessarily have to be awake to do the first half of the day. That's my overall goal here. So that mistake was not fun, but what we're holding right now is one XLE position, which is energy, right? That's going to be swinging around a bit. So it's up nicely, currently at about 2.1% up unrealized. and its stops have been ratcheted up and locked in for cushion, right? And the profit target is roughly 8% as usual, or above if it can get there, right? If the indicators still say it's got more movement, it's just going to ratchet up those losses or those stop losses and put them closer to the actual position where it is now. Just so if it comes down, it still locks in some profit, but it doesn't cut off its head. It might keep running, right? So don't cut your winners too soon, right? And I don't want the agents to cut their winners too soon either. Given everything that we just talked about, though, with the oil and Hormuz and the genuinely well-timed sector bet, whether or not it's fully intentional, I don't know. The sleeve itself is doing pretty good. Kairos is doing pretty good. I don't know how where it got its information from to grab energy right before Hormuz started pumping. So I kind of want to look, like, because maybe um, it's got like just a little bit of um, heads up somewhere, right? That's what I'm looking for. Is that like, how did you find energy right before oil started rallying, right? So I was like, interesting, right? So it sort of saw it coming, even though we didn't see it coming. So that's the little stuff that I'm gonna try to like note and hope, like really try to pick apart like those little, like, you caught it beforehand. That's what we're trying to catch, right? We're trying to like get it right before it runs and cut it before everybody else gets there, right? Because that's when people are like, oh, it's running too much, sell, shorting. People start putting puts on their positions, that kind of stuff, right? But if you can catch it right before it starts to like, then you're like, you can catch the momentum before the market starts to mess with it a little bit more. Now, this is where you really see the damage, though, on the open shares. So it started out with like a NAV of 1.0, and it's now sitting at 0.78 on the NAV side. So nearly down 22% on that sleeve from inception, mostly on paper, right? So the overall account didn't actually take that loss. I've made more than enough back on those positions. It's just on that particular portfolio, it stung a little bit. It's like, dude, you didn't have to do that. Like, it wasn't even the loss. It's like that money was baked in already. It's like, what do you do? Why did you have to touch it? Ugh, just listen. I wish it would just stay in your lane. So that's my weekend. I'm gonna type into Claude, stay in your lane. And for you guys, just in case you missed that part, this is where, nope, here, this is how you get your Claude dispatch to stop bothering you. Like, if it bothers you like too much, and why does it keep asking me if I can see this, that kind of thing, you can get there. You can fix it. It's in the computer, in the dispatch under the little dots, and you can get it to kind of stop running its background processes. So it's sort of like a Control Alt Delete for dispatch, if that makes sense. So you can just be like, okay, stop doing stuff. Because sometimes, like, even when you try to press stop on the conversation, it's still going. And you're like, what are you doing? I said stop. It's like stopping a train. You know how long it takes to stop a train? Like, you press the brakes now, and it stops like 12 miles from here, depending on how big the load is on that train, right? So it's not stopping on a dime, and Claude doesn't stop on a dime either. So if you need to stop it on a dime, you get to those three dots on your laptop. Now, let's look into next week. As far as what the desk is looking for, they're looking at the Fed decision, right? They have CIOs and researchers, right? So the researchers also go through these things of what's going on next week, and this is what the desk is looking at next week. So the Fed decision lands on July 28th, 29th. XLE needs to clear that 63.03 target on the desk. And there's a short put on NIO expiring today, which most likely got assigned, which is fine. That's another part of the wheel that's starting. Now, the position choices are under a certain amount per share price, right? My goal is not to buy the most expensive stocks out there to do this. My goal is to figure out a way everybody can do this with a small portfolio, right? I want people to know that they can do this with whatever they got. and then they can start it from there. They don't have to have 200K and go from there. Because honestly, you can put 200K in the market anywhere, and compounding would just make it perfectly fine forever, right? Like, but getting to that point is what this show is for. Trying to get you guys to that point where compounding can just take over for you and do all the work before you're too old to use that money for fun stuff and life and goals and love and whatever, right? I want to make sure that you guys can get information about how to get your money to a place where you can grow it and love it and enjoy it for as long as humanly possible. Now, let me just check my audio on both spots. X is running fine. Nobody there yet, but that's okay. I'll start pumping it that we're there. But I got you guys here on YouTube. Thank you for being with me. Let's get into the bullish outlook for next week. Enough about how much I want to strangle Claude's neck. You know what? That's what I'm going to do. I'm going to try to find some kind of lobster plushie that I'm just going to strangle every once in a while. Because you can't strangle code, right? The only way you can cause physical damage to code is design something that takes physical damage. But code doesn't feel any pain, right? So you're like, bleh. So I gotta get a plushie of some kind of crustacean to just... Okay. And then I'll hook it up to Claude. So every time I strangle it, Claude stops. Oh, that would be a great idea. Strangle with a USB cord. And like every time you squeeze it too hard, Claude's like, okay, you're upset. Great. I'm going to chill out. Sorry. What can I do next on your prompt? Oh, that's a good idea. Can somebody make like a squeeze toy that understands how frustrated you are with your AI? It's $1 billion idea. Screw it. That could be $1 trillion idea. I don't know. Like kinetic, other than a keyboard, obviously, but keyboard only has one strike. It has no gauge on frustration, right? But like if this plushie would like know how much you're squeezing it and how little you're squeezing it and understand your frustration with its computer, maybe it would actually be a good idea. People love squeezing stuff, especially out of frustration. But let's get into the bullish outlook for next week. So FOMC, like I said, is July 28th and 29th. This is the big one. Rate decision plus Fed commentary. The VIX has been sitting elevated around 16 to 19, which tells you the market is bracing, but not panicking yet. It's in that fear area, though, if you like the fear greed index. If the Fed signals any dovish lean, given how choppy tech has gotten, that's real fuel for a relief rally, especially in the beaten down Mag 7 names. Obviously, my boy Intel, turnaround story with some legs. If data center and AI revenue keep compounding at anywhere close to this quarter's pace, that's a name that could keep working even in a choppy tape because it's not priced for perfection. The way Tesla and some of the AI darlings are. Energy has real tailwinds between the Strait of Hormuz risk and any supply disruption news. Energy names, including our own XLE and the Kairos desk, have a geopolitical premium, or VG too. Like I hold some of those shares as well. But built in that isn't going away overnight. And that's a sector with growth watching for continuation, not just a 1 week pop here. And the AI capex quote, show me quote, close quote story is actually healthy long term. A market that starts demanding discipline instead of just cheering big numbers is a market that's maturing, that's bullish for the names that can actually monetize what they're building. And it's going to separate the real compounders from the story stocks over the next couple quarters. So yeah, rough week, but the ingredients for a good setup into August are right there. Stay patient, stay disciplined, and let the Fed do its thing. And react to what actually happens. not what you're afraid might happen, right? Fear and hope are roughly the same type of thing. They don't necessarily exist until something's actually there. Whew. All right. Now that was a crazy week. I hope you guys kept your shirt. You guys didn't end up over leveraging into AI. And if you did, well, then you're probably new to the show because I've been telling you for how long to be careful. Nothing runs forever. Nothing just goes straight up. What is this? Like, come on. You got to be pragmatic about yourself. And now, if you are running on hope in AI and just throwing money at it, well, the companies you're throwing money at, hopefully they weren't AI darlings and they were companies like Intel who are actually creating a great revenue, right? So, big tech getting a reality check on spending discipline, Tesla's roughest earnings day in a year, Intel quietly having its best growth quarter in 15 years. Oil swinging around a real geopolitical flashpoint, and our own agentic desk pissing me off this week. And honestly, it's a process. And we all get caught sometimes. And we're fixing it in real time in all of our positions, right? We manage them. We hope them into a good place, right? We have to keep an eye on ourselves, though. Confirmation bias is a real thing. The smarter you become, the more knowledgeable you become about a subject, you tend to think you can only be correct about it, right? You have to realize you can still be wrong. You have to come back and be like, okay, maybe I was wrong about that, but that's fine. I'll be correct next time. And that's why we keep doing this. That's why we keep doing things like learning how to trade, learning how to build agents. Um, it's important for our overall cognitive health. Your brain wants to work. Your brain wants to do complicated things. So if your brain constantly avoids complications, it'll never become the supercomputer that's really in your head. But if there's one thing you can take away from tonight, markets don't punish ambition. They punish ambition without proof. And portfolios don't get hurt by bad luck nearly as often as they get hurt by missing the basics. Like a stop loss that should have just been there, right? Or me just letting the agentic desk know, hey, don't touch this, right? So, but I know this moving forward now. So check your own positions this weekend. Make sure they have their stop losses in the right spots. Not everything requires one in a traditional sense. Sometimes an indicator that tells you that the RSI has gone below 30 and you're like, "Oh, well, maybe I start looking at trimming my position now," right? That's what we're looking at here. If we're going to be focused on our portfolios all the time, we have to make sure we're doing it well because we don't want to watch ourselves lose. That's so frustrating. That's like setting yourself up to fail, right? Put your stop losses in, right? That's the one thing I can say that's almost advice. Put your stop losses in, right? Always use stops. Futures, options, open positions of whole shares, right? Got to be whole shares or they don't do stops. So the dashboard did its thing. My desk did its thing, right? You guys are doing your thing. I'm really enjoying all of these discussions I have with you guys and having more people join the chat and expanding the places I can spread my mana'o to. Mana'o is my love for sharing, right? My story, my being, right? Who I am is what I'm trying to share. But before we get into it and start going too far, we're rolling up on almost an hour here. If anybody has any questions, whether it's there on X or here on YouTube, please drop them in the chat. I'm going to be here just for a little bit more. I want to double check and make sure I didn't miss anything for you guys. So please enjoy me for a moment. I'm going to take a look at this. All right. I know there was one more interesting thing that I wanted to share, but let me just find it real fast. Now, if you guys are on X listening to me right now, obviously you can't see anything, so please jump on YouTube if you want to actually see what I'm talking about. But since it's being a podcast, I want to expand out to whoever wants to listen to this content in the well, it's 8:50 at night here in Hawaii, so most of the country is just sleeping and they'll catch some of this later maybe. But that's okay, right? That's why we do this for the people who are here who want good content even in the middle of the night. All right, so here's a quick breakdown of the overall Kairos desk, right? So it didn't do overall bad, right? So the week ended down just a little bit, but the positions closed clean. We had a little bit of a mistake. That happens sometimes, right, gang? It's okay. That's not going to hurt anybody. All right, let's see what else we got. I think there's one more. There we go. Right. So if you guys are ever looking for updates on the way this agentic portfolio trades, now this is an experiment, right? So I'm running a live experiment here with Real Capital. But if you want to see what it does, check out the updates that I make throughout the week. Every day I put out one towards the 12 o'clock my time, middle of the day, how the day's going every week, how the week is going, because I want to keep this transparent because this is brand new, but I'm pretty certain this is where the future is going to be for a lot of people. And once we can kind of suss out all the nitty gritty, kick all the tires, then we can really see the overall pearl that's inside of there that can really grow a whole future here. Like I said, this could be the thing that makes jobs optional, right? So that's what we're looking at here, is right. This could be the thing that makes jobs optional. And I want to try to get on the ground floor of it. And hopefully I can show you guys the ground floor of where agentic technology is. Now, this is just one facet. Like I also said, I created a sign company. Now, I'm not going to show you those signs because, well, if you follow me anywhere, you've already seen them. So there's no sense. Let's see. But yes, also, like I said, please go check out the Odyssey. I want to thank my mother-in-law for taking me to go see the Odyssey this week. That was really nice of her. We got a whole conversation going about Homer, the Iliad. Like I have to, where's my book? I have it in here somewhere because I have an illustrated version of the Iliad that I'm going to. Oh yeah, here. So this I'm probably going to start reading now, obviously, because I just saw the Odyssey. So I'm gonna get into this now. The Iliad's real gory. So if anybody wants to, hey Christopher Nolan, if you want to do another one, hey, Iliad could be a good one too, especially if you did so well here with the Odyssey. But I like this one or this version of the Iliad because it's actually got illustrations in it. Right. So this was a gift from my wife. So it's one of my favorite books, just because it's so hard to imagine the things that they were going through, or at least the stories that they were written about, the gods, um, the demons, the angels, the journey home, right? So go see the Odyssey, guys. It was such a good movie. But that is it for the show. That was, well, this was the week that was, and another week is done. Ahui ho, farewell. Thank you for joining me. Please keep your brain sharp. Check on your mental health. It's very important, as Uncle Drew Carey says. And I love you. I'll see you out there on the markets, and I'll see you on the porch.